Hello, viewers. I'm Arvind, and I welcome you all to this wonderful session. Ask us anything on commodities. And this session is in line with the other sessions that we conduct, like Ask the Experts, that we conduct on the ICICI Direct's iCommunity platform also. So you can go ahead to that platform to check our previous sessions also. So I hope that by now most of you would be aware that commodities are also are tradable in India, just like we trade stocks and stock derivatives, etc. So just that stocks and stock futures and options are traded at NSE and BSE, while commodities are traded largely at MCX. MCX is the multi-commodity exchange where commodities are largely traded in India. Well, even if you didn't know that commodities are being traded in India, it is totally fine because you're just at the right place to get a good head start to learn about commodities trading. Well, even if you have known about it, are you completely aware of the details of commodities trading? Do you know the contract specifications? Do you know what are the market opportunities? Do you know what are the data points that you should look at before trading in any specific commodity? Are the commodity contracts liquid enough? Do you get easy entry and exit? There are a lot of questions that you can ask us. Addition to this, even if you have known most of these details, have you started trading yet? If you have not, aren't you sure is commodity trading exactly for you? Whom exactly does this commodity trading benefit? Well, as we see every day, whatever we eat, drink, wherever we stay, the house, the vehicles that we use to commute, the fuels, the other energy sources that are used to drive all these things are all commodities. So one way or the other, every one of us is directly related to the or directly connected with the commodities. So that sounds like basically commodities benefit every one of us. Is it true? Is it right? So just confirm it from our speakers today. Ask any questions you have about commodities and commodities trading in the chat box below. We will make sure we will answer every single question of yours. And so for clearing out all your questions, we have with us today Mr. Sumesh Vaidya, Senior Manager for Business Development at MCX, the Multi Commodity Exchange. He has over 16 years of experience in the commodity space. He has worked with both commodity derivatives and the spot markets. So before joining MCX, he has involved with many other institutions and exchanges also in the commodities derivative space only. He has immense knowledge and experience in the product and the business development aspects. We welcome you, sir.
Thank
We
you.
also right. We also have with us today Mr. Jitendra Kumar Patle, Product Manager for Commodities and Currencies at ICICI Securities Limited. Mr. Jitendra here has been associated with the financial markets for over 14 years, and with ICICI Securities alone, he is associated with over a decade. Mr. Jitendra Kumar has involved with various products like stocks and mutual funds also, and currently he is managing commodities and currencies at ICICI Securities. Welcome, sir.
Thank you, Arvind.
Yeah. And thirdly, we have with us Mr. Saif Mukarram, Research Analyst for Commodities and Currencies at ICICI Securities. So whatever, if you have been following the ICICI Direct pages where you look at the daily reports, weekly reports, monthly reports, and also the traders, for the traders, we give regular research recommendations from ICICI Direct. We have Saif's involvement in all those research activities. Welcome, Saif.
Thank you, Arvind.
Right. So viewers, we kindly request you to put in all your questions, be in English or Hindi, in whichever language you feel comfortable in. Please put in your questions. We'll take up your questions. And to give a head start, Mr. Sumesh, I have a very basic question related to the recent happenings in the market. We have been seeing that US dollar has been for the past few weeks have been hitting new highs every day. And after many days, it's today that in India, rupee opened at its 7 weeks high. So in this scenario, when dollar is again moving back, so what view do we take about the commodities market?
So, I will not be able to give price views, but I would like to give a correlation between currencies and commodities. As you're all aware that India is an import dependent country when it comes to commodity. For example, crude oil that we consume, we import it. And gold, silver that we use it, that is being imported. The metals, though we have a local price discovery contract, but we import to a large extent from international markets, right? Agri commodities, to some extent we import as well as we export, right? So whenever these commodities are imported and exported, the most common currency in the international market with respect to commercial transaction is US dollar. So any impact of movement in US dollars is going to impact the price of the commodities. In this case, what's going to happen is the rupee, which has come down from say 82 levels to 80 levels today, it's become cheaper by 2 rupees, which means the commodities would become cheaper technically based on a simple mathematical calculation, considering the price of the commodity does not move, but the currency has moved, right? So currency is appreciated against US dollar. So mathematically, the price of the commodities would correct. So simple language, if crude is trading at $100, earlier, if it was 82 rupees per dollar, it could have been 80 to 100 per barrel. But now the currency is trading at 80 rupees. So technically, the crude should also trade at 8,000 rupees a barrel.
Right. Thanks for that, sir. From our customers, from our viewers, we have this one basic question we have been hearing since a long time. Since most of our viewers are involved in equity trading, so they would like to understand what is the basic correlation between the equity markets and the commodity markets.
This is for me?
Yes, sir.
Okay. What's the correlation between equity and commodities? So let's understand what commodity market is first of all. When we talk about commodities, we are talking about most common things which are of daily use to a human being, right? The room which we are sitting, it's the air condition on, the AC is used, and manufacturing, copper is used to manufacture AC, right? The food that we eat, the clothes that we wear, the ornaments that we wear, it's all surrounded by commodities. The electricity that we use is also a commodity, right? When we talk about commodities, it's all items of consumption. It's item of consumption by the people. So if the prices of these commodities tend to go on a higher side, what we are talking about is inflation. As simple as that. That's what we have been hearing last 1.5 years, where inflation in the country as well as in the international market, especially in the US, is going on the higher side. Why? Because of the prices of commodities are on the rising side. Then we have supply side concerns are also on the prices. So what happens is it has got an indirect relation with the equities market. When the prices of commodities rise, the inflation increases. What the central bankers do is they increase the interest rate. When they increase the interest rate, what happens is generally the cost of fixed funds go higher. The returns on fixed investments goes higher, whereas returns on equities go on a lower side. Now, there are specific equity companies which are exposed to commodities. Namesake, Titan Company Limited, which is the largest. It's a conglomerate. They are exposed to a lot of consumable items, the largest being the jewelry business, which is the gold business. So any fluctuation in the prices of gold, it's going to impact their balance sheet, their profitability. If they have the price of gold is less and there is more sales, it is fine. But if the price of gold is more, the sales are less, it's going to impact the profitability. Eventually, it's going to impact their the share price, right? So commodities basically gives you a signal in the future whether the prices are going to be on the higher side or the lower side, considering the demand supply dynamics, whether it's an inflationary or recessionary trend, and accordingly people at large can fairly make an assessment saying that, okay, fine, commodities are now getting cheaper, which means there could be a possibility where there could be no interest rate hikes and the equity markets could outperform from their current levels.
Right, sir. That was helpful. Thank you. Mr. Saif, there's one question for you.
Yeah.
Sure. What is the outlook for gold in view of the interest rate hikes?
Okay, sure. See, first of all, let me tell you what is happening in the market right now. The markets are too uncertain right now because of the elevated inflations, and the central banks are increasing interest rates to curb the inflationary pressures. So what has happened is US Federal Reserve has recently increased its interest rate by 75 basis points. That is the fourth consecutive time they have done this. And in the coming future, the US Federal Reserve is expected to keep increasing the interest rates, but there could be a chance that the magnitude of the interest rate would be less. Should start accumulating the gold for the targets of 53,500 to 55,000 in the coming months.
Okay. Right. Thanks for that, sir. Mr. Jitendra, the next one is for you. One of our viewers, Mr. Suresh, has this question: like, are agricultural products are also allowed to trade in ICICI? Let's say, for example, coffee, etc. So I think basic question is, what are the commodities or the commodity contracts that are available for the general public to trade?
Yeah. So basically, four types of commodities are allowed to trade. First category is bullion. We have the gold. In gold, we have the four variants: gold, gold mini, gold genie, gold petal. In silver, we have the three: silver 30 kg contract, silver mini, that is a 5 kg contract, and then silver micro, that is 1 kg contract. And silver are very liquid. The second category is our energy. In energy, we have the two commodities, that is crude oil and natural gas. Third one is base metal. In base metal, we have the 5 base metal contracts: aluminum, copper, lead, nickel, and zinc. And the question about the agriculture, in agriculture, we have the commodity cotton. Based on the liquidities, we enable the contracts. So as of now, at ICICIdirect, we have the cotton for trading. Yeah.
Okay, thank you, sir. Thanks for that. It was clear. Mr. Sumesh, just another basic question. Like every person who's first time coming into the commodity market, trying to understand, wants to know: is commodity trading for me? Who is the exact person who should start trading in commodities?
Well, you would have heard a very common term that do not put all your eggs in a one basket, right? What we have seen is I have a lot of presentations, and one of the data point in the presentation is portfolio diversification, because of inverse correlation of commodities to the equity markets. In the same parlance, if I compare with gold, which is most commonly understood commodity across India, even a small child to the oldest of adult understands gold very well, because we are the net buyers of the gold and we are price agnostic. So gold tends to be inflation hedge, safe haven investment. Very difficult to earmark, but yes, it is always good to have some portion exposed to commodities as well. On the exchange's website, we have a research paper wherein MCX and IIM Kozhikode had done a research study wherein we had suggested that exposing yourself, your money to commodities in a portfolio, your overall risk adjusted return, which is the Sharpe ratio, increases significantly as compared to over a long period of time, as compared to having exposure only to equities or equity debt combination, right? So what I would say is, any starter who wants to enter commodities understands gold very well. They should start with gold. Mr. Tendra already explained about 4 variants of the product available with us with different margin requirements. So yes, any new starter, gold is the best asset class to venture into.
Well, right. Okay. So just a follow-up question along with that. So if I'm at all going to start with commodities, how liquid are the contracts at MCX? Like, will I be getting good entry and exit, easy entry and exit?
Yeah. So MCX gold and silver contracts are the benchmark price reference contracts in India. What do I mean by benchmark is, in fact, the physical market participants uses our prices to price their own spot prices or the products, right? Number one, we have a large pool of liquidity in our gold and silver, with participants spread across hedgers, the large hedgers, the large dwellers, the retail participants, and even the institution participants. So when the SEBI as a regulator allowed institutions to participate in commodity derivatives contracts, these 4 to 5 institutions like mutual funds and AIF have also started to participate in commodities, especially in the gold and silver contracts. So yes, these contracts are very liquid, large liquidity is there, with lowest or minimal impact cost, and that's where they can trade easily based on the risk appetite.
Okay, thank you, sir. Thanks. Mr. Saif, the next one's for you. Generally, since that we are entering into the winter session, into the winter seasons, so naturally the primary questions will be about crude and natural gas, the energy products. So we can also see some questions in the chat box pertaining to crude oil. So what is the view on the energy products, and can we expect crude to go rise back to $100 again?
That's a good question. Let me come up first to the crude oil prices. As you have said, that's a question like whether the crude oil prices will reach $100. Yes, there is a chances that crude oil prices may go back to $100, majorly because the OPEC organizations, what they have done is they have cut down by 2 million barrels of production which will be starting in the November. And again, the Russia oil exports are also expected to tighten the crude markets, like the sanctions which have been put on the Russian oils, which will be taking starts from the November as well. So that will be having a negative impact on the a slightly positive impact on the crude oil prices. Yes, but the dollar will have a strong resistance of 100, and we expect the US crude oil prices, or you can say the crude oil prices, to trade in the range of $75 to $100, because on the other hand, the slowdown in the global economic conditions will hamper the demand, and even the China is going on with the zero COVID policy. So if the China, the largest consumer of the crude oil, is also showing a slowdown in the economy. So the demand is going to get hampered somewhere or the other way. So that's the reason we expect crude oil prices to remain in the range of $75 to $100. Going forward to, as you said, that winter is coming right now. So yes, as the winter is coming, we can see a movement in the natural gas prices, where the natural gas prices are expected to hold the support level of 400 and expected to move back to 625 to 650 in the coming months.
Okay, sir. Right. So we can say that we have a positive outlook for crude. Like, is it definitely right time for the for our customers?
Yeah, you can say, because it looks like it will bounce back again. So a person can go for a buying in the energy complex as well right now, whether it is an NG or whether it is a crude oil prices. But as I've already mentioned, the fundamentals for both the commodities are different. The crude is because of the tightened supply, because of the sanctions and the OPEC reduction in the crude oil production, that will be supportive for the crude oil prices. Whereas on the NG, yes, the winter is coming, so you can say most of the time the natural gas prices shoot up because of the heating demand. And so yeah, both the commodities can be go for a buy on dips, you can say.
Okay. Thanks for that, sir. Mr. Jitendra, there's one question from Tejasvi.
Yeah.
I want to learn commodity trading. I'm a novice. I'm a newbie. So, what guidance do you have for me?
Yeah. So first of all, we do multiple webinars like we have right now. At least once in a month, we have such kind of webinar or investment awareness session on commodities and other products. So you can follow this. Apart from that, on website, we have the few information on commodities market, how you can get the information of the products, which are the products available, like chain, trading pattern, contracts, which are all details is available. Also, we have the presentation on how to trade in commodities. Just I will share my screen for a few seconds. Just a second. Yeah, I got access. Yeah. So this is the ICICIdirect account. I hope my screen is visible, Arvind.
Yes, it's visible, sir.
Yeah. So I am logged into my ICICIdirect account. I am on commodity page. Here, if I can come down, here are some presentation, just like here the commodity presentation. how to trade in commodities. For corporate, we have the presentation. The customer can get such information about the commodity market, how to trade. All this information are available on site. Apart from that, we have the research reports available in logged in section, not logged in section also. If somebody visits to our ICICIdirect website, this is ICICIdirect.com, if they goes to the commodity segment, we have a product page under commodities. I am moving to that. Under product page also, we have the research reports, daily, weekly, monthly, yearly, all reports are available here. So yeah, these are the reports, daily, weekly, monthly. I will just open the daily reports. This reports comes early morning around 8:30 a.m. So we can get the view of the market, what is expected for the day, for all the commodities, we can get the view here. So similarly, we have the weekly, monthly, and other reports. Apart from that, we have the various articles posted here on commodities and commodities. Then we have the videos also. If somebody want to understand about the commodity market, they want to learn how to trade in commodities. So these videos are also posted here. So this can be referred for education purpose.
Okay, so
I
that
am
was
able to answer.
yes, that was helpful. So additionally, along with that, can you also help like what is the capital or initial money that is required to first time enter into it? Or for first timers, what are the contracts that you would suggest of commodity contracts for the customers to trade?
Yeah. One more thing, we have. I'm just going back to the last question. We have the commodity and currency ICICIdirect channel on Telegram. If they want to understand, they want to get a live market information, then they can follow, they can join our Telegram channel, that is commodity and currency ICICIdirect. Yeah. Regarding your next question, how much margin required to start in commodities? So we have the wide range of contracts. It starts from gold petal, which is the smallest contract in commodity. That is 1 gram gold contract worth rupees almost 5,100 or 200. And for trading, suppose somebody want to understand the commodities trading, then they can start with gold petal. And margin requirement, capital requirement for trading gold petal is almost 10%, 8 to 10%. So within a 500 rupees, somebody can start trading in commodities with gold petal. That is one. Apart from that, we have the various contracts, just like gold genie, which is the 8 gram contract. So again, this contract value is around 40,000 rupees, and margin requirement would be around 4,000 rupees. Now I will go to the silver section. In silver, we have the smallest contract, that is the silver micro, which is very liquid and very popular. We have seen that key, as per our experience at ICICI Securities, the most traded commodity is silver micro. So in silver micro is 1 kg contract. Suppose right now silver is trading around 60,000 rupees. So for starting trading in silver micro, again almost 12% margin required. So within 6 to 7,000 rupees, you can start trading in silver micro, and you will get a good enough liquidity as well as volatility to trade in silver micro. So these are the 3-4 contracts for beginner who can start with small capital. Also, we have the commodity options, where crude oil, natural gas, or gold, silver, these are the contracts available for options, where with a small premium, 4,000 rupees, 5,000 rupees, they can start trading commodity option as well.
Okay, right, sir. Thank you. That might be helpful for our viewers. Yes. Mr. Somesh, there is this doubt from Mr. Suresh. He says, like index or stock options, commodity out of the money options doesn't go to zero on expiry. Is there any specific reason? So basically, what is one difference from stock options and commodity options? If you can explain that.
See, what I understand, let me explain what is commodity options. We trade options on futures. So we have an underlying liquid futures contracts on which the option contracts are designed. presently we have options on crude oil and natural gas in the energy segment, and we have options on gold 1 kg futures, gold 100 gram futures, silver 30 kg futures, and silver 5 kg futures, right? So these are fairly 6 liquid options contracts available for trading. And mind well, these are options on futures, which means underlying futures liquid contract on which the options are derived. The expiry date of these option contracts for crude oil and natural gas is 2 days before the expiry of the underlying futures, and for gold and silver it is 3 days before expiry of the underlying, before the start of the tender period, the delivery period of these gold and silver contracts, right? So what we are saying is technically the gold and silver option contracts expire around 7 days before the actual expiry of futures, whereas in case of natural gas and crude oil, it expires 2 days before the expiry of the underlying futures, right? So because of that reason, one of the reason it could be is that the options, specifically the out of the money options, which are especially during the last week of trading or last day of trading, people understand that options trade till 11:30 in the night, the prices are not going to come forward, and the options expire worthless. So precisely the reason why exactly it does not go to zero, but it has some value because of the time difference.
Okay, right.
Otherwise there is no any scientific or technical concept which says that why it is not zero.
Okay.
Because these are not settled options contracts. These are options on future.
Okay, right, sir. And basically, I've also mentioned that commodity options are basically options on futures, not options on goods. So there is that difference. So what difference does it bring in terms of trading?
So in terms of trading, yes, so you need to understand two concepts out here. If you are in the money, either you square off your position before the expiry of the contract, the difference is your profit, else your position will get devolved or converted or transferred to the underlying futures contract. Unlike in equity market, if you trade options on Nifty or Bank Nifty or options on index, which are cash settled options, even if you keep your position open, the underlying Nifty is basically cash settled, right? It's an index in itself. In case of underlying stock options, like options on, say, Reliance or options on Infosys, again, it's a concept of in the money and out of the money, wherein if it's in the money, the position gets transferred to the underlying spot position, and you have to either give or take delivery depending upon you are in call side or put side. So our commodity options are similar to the individual stock options, wherein in the money positions, either you square off or it gets converted or devolved into underlying futures. And then in futures, you have time to square off position or you have to give or take delivery of the commodity.
Okay, well, right, sir. Thanks for that. And Mr. Saif, there are some questions for you also in terms of research perspective. Like, what's your take on copper?
Okay. Right now the base metals are, in short, I will say copper, which you have already, which you are asking about, is showing some positiveness right now. The reason is because of the tight supply in the global markets. Recently, what has happened, the Peru and the Chile there is a disruption in the production over there, due to which there is a tight supply in the market, and even the China producers are urging governments to mine more because of the tight supply. And again, the LMA inventories which we track is near 7th-month low. So these are the major reasons, and even the dollar, again with the weakness in the dollar, these are the major reasons why the copper is moving on the upper end and looks positive. And the copper has formed a base, or you can say a good support near 620, and we expect copper prices on M6 to rally till 725 to 750 in the coming months. But a sharp rally beyond 75 I'm not expecting, is because there is a slowdown in the global markets, in the global countries. So there could be a chance that it may hamper the demand for the base metals. So one can go for a buy right now on dips, you can say, for the target of 725 to 750 in the coming months.
Well, sir, but okay. Sometime back, Sumesh sir has mentioned that commodity market is open till 11:55 at night.
Yeah.
So I think that this gives an opportunity to make use of price movements in the international markets also. Is it so? What is your view
Yeah,
on that?
see, that is a see what happens is in commodity market, major movement comes after 6 p.m. You can say after the once the data comes up from the US, which usually we see it comes in the evening session of from 6 p.m. So what happened is whatever the major movement has to happen moves. We can see in the evening session. So as the MCX is open till 11:55, the lot of the major movements have been captured during this period, and we get a huge volatility. So it is a good opportunity for the commodity traders to participate in it and make the profit out of it.
Right, sir. Thanks for that. Thank you, Mr. Jiten, sir. Through ICICI Direct, what all exchanges can we trade for commodities in? Like through ICICI Direct, if you're trading, what are all the exchanges that are available for the customers to trade commodities at?
Yeah, in India, we have the 3-4 commodity exchanges. The biggest one is MCX multi-commodity exchange. We have NCDX, NSC, BSE also recently started. But 95% trades happens on MCX. So we are live with MCX. All futures and options are traded at ICICIdirect. So we are on MCX.
Okay, right. And through ICICI, is it possible to take deliveries of the commodities? Like, is it compulsory to take the delivery of commodity, or how does it work?
So it is not compulsory to take deliveries. And at ICICI Securities, we provide trading before the start of delivery period. There are commodities which are delivery settled, just like gold, silver, all base metals. So at ICICIdirect, last 5 days are called as a tender or delivery period. So at ICICIdirect, before start of that tender period, we disable the contracts for trading, and if is there any open position, we square up 1 day prior to the delivery period. So taking the delivery of commodities at ICICI Securities is not possible. We are not allowing, and trading halts 1 day prior to the start of delivery period.
Okay, right. Okay, sure. Mr. Saif,
Yeah.
there's one question from Mr. Harsha. For price up and down, which variables we have to look for? Like, what are the data points that we have to look at for different? What are the data points for different commodities?
Okay, you meant to say what are the factors affecting the various commodities, you can say? Okay, see, majorly all the commodities are first of all impacted of dollar because they are dollar linked commodities internationally. So however the movement we see in the dollar, that is an inverse relation we see in the commodities. Second thing, say specifically for bullion, if you say gold. So gold is considered to be a safe haven asset. So if you see there is too much of uncertainty in the market, or there is a geopolitical crisis, or you can say a war like which happened between Russia and Ukraine. So what happened during such times, the gold prices start going up. And even if the economic slowdown is seen, so a lot of time the money flows back to the gold as a safe haven. So these are the some of the factors which you can look for. Or and one more thing, you can see the yields, 10-year government bond yields. So majorly it has an inverse relationship with the 10-year government bond yields. If the yield rises, there is a downside pressure on the gold prices. So these are the major factors which you can look for the gold. For silver, silver is also an industrial matter. It has an industrial usage as well, and even it works in the bullions. So it gets impacted. It follows the gold prices as well as it follows the gold and as well as the base metals. So there are times when the silver outperform the gold prices. So you can look at the both the scenarios. On the base metal side, try to look forward to major economic data coming up from US, Europe, UK, majorly China, because which is a major consumer. So the base metal scale, you should look forward to the major economic data like manufacturing PMI data or the housing PMI data or housing data which come up from US or China. the inventories, the LME inventories, which are very important for the base metals, the cancel warrants, which you look forward to. So these are the major factors which you should look forward for the base metals. On the energy front, for crude oil, specifically look for the OPEC decisions, what they do, what are the production and supply in the market right now. And is like right now, which the Western countries have put sanctions on the Russian oil. So that has also created a lot of volatility in the crude oil markets. Then you have crude oil inventories, which come up on Wednesday from US. So that data you can look forward for the crude oil prices. For natural gas, you should look forward to what are the predictions for the winter coming up, how the demand is going to be. So these are some of the major factors which you should look for the different commodities.
Okay, thank you, Mr. Saif. Mr. Somesh, there is one question. I heard commodities are usually volatile. We have also seen situations where crude oil going and the negative pricing also. So generally commodities require higher capitals to trade in. So I'm not risking all that much money with commodities. So how to actually have good strategies while trading with commodities?
That's right. So since commodities are really volatile, the margin requirements are on a higher side. But for a financial participant or a retail participant, if he still wants to trade in commodities, we have either we have a lower variant products available, just like we talked about gold and silver, but we have another products like index. We have sectoral indices like Bulldex, which is fairly liquid right now. We have energy index, which is not liquid right now, and we have metals index, which we believe will get liquid in the month of January, February onwards. So these are sector specific indices. These are the cash settled indices with lower margin requirements, roughly 6%. So if I talk about Bulldex, the margin requirements are anywhere below 50,000 rupees. That's number one. Number two, you want to expose yourself to commodities with lower risk and lower capital requirements, then we have options. Options are one of the best products to trade when it comes to retail segment, as it entails a lower capital requirements. So suppose if I have a view of crude prices going up, I can take a call option of out of the money for 9,000, 10,000 or 8,000 levels, which will have a lower premium requirements, right? And we know that crude prices are really volatile, and the moment it goes higher, that's where you start making money. Your investment requirement is very low, right? The risk is limited to the premium that you have paid, unlike in futures wherein you are paying full margin and there is 1:1 risk to reward ratio. So options are really good product to look into when it comes to retail segment. One, low risk requirement. Two, low capital requirements.
Okay, thank you, sir. Thanks for that. Mr. Saif, there is this follow-up question from Mr. Harsha. He asked for data points for various commodities, right? He specifically wants to understand what are the data points to look at for gold and silver specifically. So what data points would let know prices of gold and silver go up or down?
Sure. So see, as I've already mentioned, for gold prices, you should look forward to dollar index, first of all, how the dollar is performing, because it has an inverse relationship. You should look how the interest rates are going, whether how the US Federal Reserve is going ahead with the interest rates. So that you should look forward to. How is the inflation performing? Because as the inflation goes high, yes, it's a hedge against inflation that the demand for the gold goes. But on the other hand, if the central bank starts increasing the interest rates to control the inflation, then there is a chances that the gold prices may come down, because the yield starts going up on the 10-year bond treasury yields or 2-year treasury yields. So that's because it has an inverse relationship. So you should see how the yields are performing. On the other hand, see how's the demand and supply scenario, or World Gold Council reports we can see, you can view them, see whether some of the central banks are purchasing or what are they doing for the reserves. One more thing is like geopolitical crisis. That's what I've mentioned. Like if there is a war, which we saw Russia and Ukraine, and due to which there was a sudden spike in the gold prices, there was a demand because of the uncertainty. Global slowdown is also a reason for demand for the gold prices. Then one more thing is bumper crops, because in India we large consumers, or you can say the buyers of the gold, are from the rural areas. So the bumper crops is also seen providing some support for the gold prices because the demand increases. As we know, India and China are the major consumers of the gold. These are the specific things which you can look for the gold. On the silver front, as I've already mentioned, silver follows gold as well as base metals. So you have to see how this commodities move. Even the dollar index impact the silver prices, and the demand supply scenario for the silver because of the industrial usage. So these are the various factors which you can look for gold and silver.
Okay, thank you, sir. Thanks for that answer. Mr. Jitendra, there's one question from Mr. Venkata Krishnan. Can you demonstrate the stop loss order for crude oil options?
Okay, thank you. So I will log in from my mobile device as well. I will show through how we can place stop loss order through our mobile app. Just give me a few seconds.
Right.
Yeah. Just confirm when my mobile screen is visible. Is it visible, Arvind?
Yes, sir. Your screen is visible.
Yeah.
Yes.
So I am logged into the ICICIdirect Markets app. So question is how to place stop loss order. So suppose I wanted to place stop loss order for future. In case I have the buy position, suppose I have purchased at 7,300 rupees. And right now the crude oil price, you can see the second script, that is a crude oil November contract trading at 7212. And I'm worried that it may go down, and suppose it goes below the 7,200, I want to exit. Means I want to put my stop loss at 7,200 rupees. So how to put that sales stop loss? I'm going to the sales stop loss page. This is the place order page. I can get this page from open position page. If you have the already open position buy position, suppose, and you want to put the sales stop loss, then go to open position page. There is a square up button. When you click on square up, you will get this page. Or I can directly place a sale order from home page also. Now I can see the rate. Suppose I have the one lot position. Now I want to put the stop loss. So here is one toggle key for stop loss. I have enabled it. Now after enabling, I can see the trigger price. So here I can put the trigger price as 7,200 rupees because I wanted to exit in case price goes below 7,200. And in additionally, I need to put a limit order because we need to give the range. So that limit price should be less than 7,200. So suppose I will put 7,190. So what happened? Right now price is around 7,212. If price goes by 12 rupees down, then once the price crosses or goes below the 7,200, my order will hit to the exchange and my order will get executed at best possible price, best available price below the 7,200. So we need to give the range. Question comes ki why this range is required? ये 10 रुपए का range क्यों देना है? मैं दोनों जगह 7,200 भी mention कर सकता हूँ क्या? Yeah, definitely we can mention. But this range defines at what price at what range your stop loss order will get activated. Means the price crosses the 7,200, your 7,190 limit order for sale gets activated. So whatever the best price available, normally आपका order जो है 7,200 या 7,199 में execute हो जाएगा. So whenever you want to put the stop loss price, then just you need to enter the trigger price और trigger price के नीचे limit price होना चाहिए. I hope it is clear.
Yes, sir. Right. And a follow-up question along with that. This is from Mr. Suresh. Yeah. When trading commodities, is it better to refer spot charts or future charts? Like for example, if crude oil ka from TradingView, for example, we can open crude oil's WTI crude oil price spot price chart. So should we look at while trading crude, or should we look at the futures price chart which is available at MCX website?
I personally believe if you want to trade in this commodity, these are the internationally traded commodities. So you can have the charts for both, because definitely if in international market WTI price goes up or down, definitely it will impact your trading in India on MCX. But additionally, because there are multiple factors, just like currency, early in first question, I think Somesh has explained. If is there any changes or any volatility in USD and a rate, that will also impact. So I suggest you need to track both the charts.
Okay, right, sir. Thank you. Thanks for that.
Arvind, any other query on trading, or because I have shared my screen, in case anybody
Yes.
has any query on a trading aspect, I can show through screen. Then
Yes,
I will
I'm
share.
looking at no specific, specific questions on trading.
Yeah.
So basic, since that you have shared this mobile screen also, so what are the platforms? What other platforms are available, are being provided by ICICI for trading in commodities?
Yeah. So definitely we have the website. I have just I think in first question itself I have shown the website, ICICIdirect website. From website, customer can trade in commodity futures, commodity option, commodity. We have the bullion, index futures also, like Bulldex, that is also traded. Apart from the website, we have the old app where we can trade. This is the new generation markets app where the price, you can see in this screen itself, the prices of silver, micro, crude oil are changing every second. So this is the one app, new generation app. We can trade in commodities and other segment also, equity, F&O currency also. Then we are also working on some other platforms, some super app, desktop-based application. So that is also available. So right now, customer can trade from website as well as mobile app.
Okay, right. There's one
Arvind,
question from
sorry to interrupt. I am able to see one question on option chain. How to see option chain, something like that. Can you check if
yeah, there's one from Mr. Sai Kaushik. In ICICIdirect, option chain is not available. Uh,
okay. So
is there option chain available on the platform?
yeah, definitely option chains are available. So right now I am showing from this screen. See, the options are available only for 6-7 contracts. The most traded option contract is option commodities is crude oil, then natural gas, then we have gold, silver, gold mini, silver mini, copper. These are the contracts where the option contracts are available. So I will show you how you can see the option chain. This is the crude oil contract. Here you can see the tab overview, research, futures, option chain. So I'm going to the option chain. You can see here the option chain is available. So I'm selecting the suppose 7,200. So I got this 7,200 option, put option. Similarly, we have the call option. So option chain can be visible can be checked from this app under this page.
Okay, so option chain is available on the ICICIdirect Markets app also. Also on the website version will be able to. Right. Okay. Okay.
Right now,
Thank
you
you.
don't have one website, but in website we have the integrated watch list where they can save their contracts and can trade or see open position on same page. So in open integrated watch list, we have the first option, my watch list, where in watch list they can see all the future and option contract on commodities.
Okay. Right. Right, sir. Thanks for that. And there's one question from Mr. Ganapati Raman. On technical analysis part of any commodity, do we have to look only for future product chart? Do we have directly the underlying charts for analysis?
I think Saif is the better person to answer. I will pass this question to Saif.
Yeah, sure. See, basically, it would be much better, as Jitendra has said, we should look up for both the charts, look for the international charts as well as the domestic charts, the future the future contracts, for the technical purpose as well. Because we can see on the international charts or the spot, say for WTI crude oil prices, if I'm seeing over there that the prices are likely to correct, so it gives me an indication, a negativeness, a downward trend. So, and on the other hand, we can see on the future M6 prices. which captures both the moment for the international crude as well as the rupee ka moment. So that will also help us to find out the resistance and the supports for say the crude oil prices. But it is, see, it's not that it will not work out if you see only the futures price and you will not be able to trade. It's nothing like that, because everything will be captured over there. So you can do that, but on the for the better analysis, I would suggest you look for all the charts, whether how the rupee is performing or how the dollar is performing, how the crude oil international WTI charts look like, and the MCX crude oil charts. So I prefer looking all the charts and do the analysis.
Okay, right, sir. Thanks for the answer. And one question from Mr. Sundaram. What is the last day for crude 16th November options contracts? I think even I can go ahead with answering this question. Since the options contract, since they are options on futures, as Mr. Somesh was explaining, on the last day, by taking additional margins, the options will be converted or devolved into the underlying futures. Okay, so also that futures contract, since crude is a cash settled contract, that is not deliverable physically, so you can trade till the last day of the contract. While in other terms, in the physically deliverable contracts, that is non-cash settled contracts like gold, silver, etc., since they are deliverable, the last 5 days of the futures contract will be staggered delivery period. So if you don't want to get deliveries of the commodities, you can square off your position before getting into the delivery period. So that's basically that.
Arvind, just wanted to add, at ICICIdirect right now, the option contract, customer can trade 2 days prior to the expiry day. So suppose the question is on, I think, crude oil 16th October contract. So if the 16th October is the expiry day, then customer right now, I think 16th October is the Wednesday, correct? Yeah. So 2 days prior to that, Monday, that is the 14th October, till 14th October, customer right now can trade with ICICIdirect. And because in last 2 days, the devolvement margin is required, because this, as you rightly said, this option contract gets devolved into futures. So right now we are working on the devolvement margin. So right now, 2 days prior to the expiry day, we close the option contract.
Right, that was clear, sir. That was very clear. Yes.
Yeah, thank you.
Yes, Mr. Sundaram, in case of crude, it is not deliverable. Yes, crude is not a deliverable contract. It is a cash settled contract. Right, sir. We'll just before ending the session, lastly, we can, if Jiten sir, if you can take us through the charges. What kind of charges are? Is it different from equities charges or and commodities charges in terms of what kind of brokerage or what kind of taxes will be applicable on commodities trading?
So the brokerage is 20 rupees per order for all the future and option contract. You can take any position, any number of lots. The brokerage is 20 rupees per order only. Then there are the charges, just like different regulatory charges. One is the biggest one is the CTT, Commodity Transaction Tax. That is the biggest charge right now. The one for the every crore turnover, you need to pay the 1,000 rupees. Means suppose you have taken position in a gold 1 kg contract, future contract, that is almost 50 lakh rupees, then you have to pay 500 rupees. But this CTT is applicable on only sale side. So if you are buying and selling, then you need to pay almost 500 rupees as a CTT. Then there are other charges like exchange turnover charges, which is 260 rupees per crore turnover per crore. Then stamp duty is there. Then which are the very minimal stamp duty and SEBI charges are also there. So I will suggest, I will show to the screen. We have the I will take the 30 second again on this ICICIdirect website. When somebody visit to this commodity page, we have the commodity brokerage calculator. In commodity, this is the page. I will come down. Here is the commodity brokerage calculator. On this page, we can see the different charges, taxes, and what could be my break even and what could be my profit and loss if I buy at particular price and sell at particular price. So this is readily available. You can view from this page.
Well, thank you, sir. Thank you so much for that. I believe that brings us to the end of the session. I suppose I've answered, we have taken up almost all the questions. So thank you so much, sir. Thank you, Jitin, sir. Thank you, Mr. Somesh. Thank you, Mr. Saif, for your valuable inputs. And for the viewers, you can also look at the description below for more other videos that we have posted from ICICIdirect.com. There are many other videos which speak about the basics of commodities trading. There are videos which explain the entire platform of where you can trade commodities and all. So there are many other videos, introductory videos by Mr. Sumesh also. Previously, when he had participated in webinars with us. So I hope the session was useful to you all, and I was very happy to host you all in this session today. Thank you so much. Thank you.
Thank you.
Thank you, and thank you. Big thank you to all the viewers. We got the very interesting and practical questions. Thank you for that. And we will try to have the many more sessions like this. Thank you.